Pound dollar update for the week of September 5th, 2016. So last week I talked about UK data coming out and surprising to the upside, and boy did they ever, with the manufacturing PMI coming in well above expectations, skyrocketing the pound up past 1.32 key resistance. Later on in the week, positive UK releases as well as a disappointing US non-farm payrolls number pushed the pound up higher to the 1.33 area, but it failed to rally further because of the huge amount of resistance in the 1.33 and 1.34 areas. At these kind of levels, there's less of a chance that short squeezes will occur, more opportunity for people to add to long-term short positions, and less buying interest. So I don't really see this rally continuing to go up much higher.
Denied.
On Monday, we have UK services PMI data. If that comes in above expectations, you might see a higher rally to 1.34, but the effect will be muted as the real surprise already occurred with the manufacturing PMI. We have US PMI data on Tuesday as well as unemployment figures coming Thursday. So the last couple of months, the UK economy has gotten a bit of a booster shot due to the devaluation of the pound, but the downward pressure from Brexit remains and should remain for the foreseeable future, as the UK has yet to trigger Article 50 and the Prime Minister may not do so till sometime next year.
So I've said that we shouldn't invoke Article 50 immediately. I think we need to.
How long?
Well, I've said that it shouldn't be before the end of the year.
And what that means in the short to near term is a lot of uncertainty. When she actually triggers Article 50, still a lot of uncertainty as they have to negotiate deals with the EU. And between now and then, you have EU posturing as well as things like the Prime Minister coming out and saying we need to curb immigration to the UK even at the cost of unfettered access to this single market. Now, the disappointing U.S. non-farm payrolls number on Friday came out and effectively put the kibosh on a September rate hike. But if I were the Federal Reserve, I would still at least be considering a September rate hike for two reasons. One, it would be a preemptive move that would reestablish credibility with the Federal Reserve. And two, U.S. elections, there's the possibility that we might actually end up electing Donald Trump. And Donald Trump represents a huge unknown quantity. Either Republican or Democrat, the last few presidents have pretty much been about maintaining the status quo, whereas no one really knows what the Donald might do or what his policies might be. So you might end up with a situation in December where the environment is such that the Fed can't even consider raising interest rates. Now, this is all highly speculative, but what I'm trying to say is that I wouldn't absolutely rule out a rate hike in September. It's still very highly unlikely, but crazier things have happened.
Please welcome Mr. So Damn Insane.